Welcome back to MarketSnap, your daily rundown of everything you need to know from Wall Street. Today was a session of two halves, with a furious rebound in stocks doing its best to mask a week of chaos that has left the bond market, and frankly, a lot of investors on edge. We're talking about a week where the Treasury Secretary stepped directly into the bond market, Bitcoin went vertical, and the AI trade suddenly started giving everyone a serious case of déjà vu. It's a lot to unpack, so let's get right into it. Despite the drama, the major indices managed to close the week on a positive note. The Dow led the charge, jumping nearly a full percent, while the S&P 500 and Nasdaq both added around 0.5%. The Russell 2000 also had a solid day, popping nearly 1% as investors showed some appetite for risk. But don't let Friday's green screens fool you. This was a volatile week, and the indexes are still nursing weekly losses. The real story, and the one that's been driving the tape all week, is the bond market. We saw Treasury yields spike to multi-year highs, and the 30-year was flirting with levels we haven't seen in nearly 2 decades. That's a big deal. It's the kind of move that makes equity investors nervous because it raises the discount rate on future earnings and offers a compelling alternative to stocks. The trigger for all this chaos? The Treasury Department's surprise announcement that it was doubling its bond buyback program. The move was ostensibly to calm the market and support longer-dated debt, but the market's reaction was, let's just say, skeptical. It felt like a Band-Aid on a much bigger problem, and the initial relief rally in bonds fizzled out almost immediately. Here's the thing that's got everyone worried. This intervention is stirring up inflation fears. Investors are starting to price in higher inflation because the Treasury is essentially trying to cap yields by printing money to buy its own debt. It's a complex dynamic, but the bottom line is that the market is questioning the credibility of both the Treasury and the Fed. There's a growing sense that the Fed, under new leadership, is behind the curve and might have to hike rates again, which is the last thing anyone wants to hear. Now, while the macro picture is messy, there were some clear winners on the day. Tesla was a standout, surging over 5% after Nevada approved its application to operate a fleet of 5,000 fully autonomous robotaxis. That's a huge step forward for their autonomous driving ambitions. We also saw big moves in the financials, with Goldman Sachs up nearly 4% and Interactive Brokers gaining over 4%. It looks like the banks are benefiting from the higher yield environment, but the real fireworks were in the metals and miners. Southern Copper absolutely ripped, gaining nearly 9%, and Freeport-McMoRan wasn't far behind with a 7.6% jump. This is a classic inflationary trade. When the dollar weakens and people worry about the value of fiat currency, they pile into hard assets. And that's exactly what we're seeing. On the flip side, it was a rough day for the utility sector. Southern Company, American Electric Power, and Sempra all sold off hard, dropping between 3% and 5%. When bond yields spike, utilities, which are often seen as bond proxies because of their stable dividends, become a lot less attractive. The money is rotating out of them and into the higher yields offered by treasuries. We also saw some pain in the AI hardware trade. Marvell Technology dropped over 5%, and ARM Holdings fell nearly 3%. It seems like the market is taking a pause to question the massive valuations in this space, especially with all the talk about a potential bubble. Speaking of the AI trade, it was interesting to see NVIDIA as the most active stock, but it closed down about 1%. The stock has been in a bit of a holding pattern, and there's a lot of anticipation building for its earnings report next week. Everyone's wondering if they can deliver another blowout quarter, or if the perfect results are finally priced in. And then there's the Robinhood story. The stock absolutely exploded, gaining nearly 14% on the day. It was the top mover in the large cap space. The volume was massive, and it seems like the retail trading crowd is back with a vengeance. It's a high beta name, so when the market rallies, it tends to move more than most. But the biggest story of the week, without a doubt, has to be Bitcoin. We're talking about a crypto rally for the ages. Bitcoin surged past $79,000, its highest level since May, and is on track for its best week since 2023. The rally was sparked by a combination of factors. the Treasury's bond intervention weakening the dollar, renewed institutional demand, and a push from the White House to pass the Clarity Act, which would provide much-needed regulatory clarity for the crypto industry. This move has caught a lot of people off guard. There were plenty of traders waiting for a pullback to $45,000, and now they're watching from the sidelines as it nearly touches $80,000. It's a classic lesson in market timing. The sentiment has shifted dramatically, and the momentum is clearly to the upside for now. Looking at the weekly winners, it's a who's who of crypto-adjacent and precious metals names. Coinbase, Marathon Digital, and Strategy, formerly MicroStrategy, all had monster weeks. We also saw gold miners like Kinross, Goldfields, and Wheaton Precious Metals rip higher, which again points to that inflationary, dollar-weakening trade. On the other end of the spectrum, the weekly losers list is dominated by high-flying tech and AI names that got hit hard. CrowdStrike, Cloudflare, and CoreWeave all dropped over 15% for the week. This is a clear sign of profit-taking and de-risking in the most crowded trades. And speaking of the AI trade, there's a growing chorus of voices warning about the risks. Michael Burry, the investor famous for predicting the 2008 housing crash, came out and said the AI data center boom is repeating the same patterns of excess, pointing to circular financing and off-balance sheet vehicles. It's a stark warning, and while it might not be the base case, it's something to keep in the back of your mind. The credit markets are starting to show some cracks, with credit default swap spreads widening even as AI stocks rally. That's a divergence that historically doesn't end well. Looking ahead to next week, we have a packed earnings calendar that will be crucial for setting the tone. The big one, of course, is NVIDIA. All eyes will be on their results and guidance. We also have earnings from Workday, Intuit, and Ross Stores. But the real macro event will be Fed Chair Warsh's speech at Jackson Hole. The market will be hanging on every word for clues about the future path of interest rates. You can find exclusive earnings transcript summaries on MarketSnap to help you cut through the noise and get to the key takeaways. Let's take a quick look at the sector action for the week. Energy was the clear leader, up over 2%, as oil prices continue to climb on geopolitical tensions and supply concerns. Healthcare also managed to eke out a gain. It's a defensive play that's working as investors look for safety.